Good afternoon, good morning, good evening, everyone. It is 7:47 a.m. Eastern Standard Time on this 22nd day of March 2021. Taking a look at Cardano here. I'm going to actually change this from logarithmic to straight up linear measurement just for here. So, a lot like Bitcoin's chart, we've seen some signs of consolidation going on here, and I talked a little bit about Cardano entering into consolidation in the near term last week in both videos and articles. I want you to take a look at where the lagging span or the Chiku span is at. It's the black moving average over here. It's currently what is called like inside, quote unquote, the candlesticks. In order to have a very bullish bias continue, we need to see the lagging span. It needs to move above the candlestick. So on the current daily, it needs to move above the high of this candlestick back here of 145. I mean, really, I did this with the dot analysis last week, a polka dot. I like to get rid of the wicks a lot of times because the wicks in a lot of cryptocurrencies are just kind of anomalous in nature and kind of pointless. So really, we would just need to see the lagging span trade, above 132.46, and that would be price too, because all the lagging span is a mirror image. It's just the current price action shifted back 26 periods. In this case, 22 periods. So if we look at it from this perspective, it needs to move up to 132, and then we are like in full blown bullish mode. We're only a couple pieces of Ichimoku analysis away from being in a new expansion phase. The span A, future span A, the green average here is above B. You have the Tenkan Sen is above the Kijin Sen. The blue is above the red. Once price closes above both of these levels here, the Tenkan Sen and the Kijin Sen, and the lagging span is above. Actually, you could just think of it this way. Once the lagging span has closed above the candlesticks, then it's a bullish re-entry. What we have going on here, if you can see it, it's hard to see, at least I think it is, it's hard to see with the wicks. All right, it's hard to see what's going on with the wicks because the wicks are really noisy. But if you remove the wicks, what kind of a pattern do you see coming up here? I'm sure some people see it. But we have an inverse head and shoulder pattern. Not the best drawn one, but that's what we have going on and forming here. So look out for that. And really, the head and shoulders are kind of, that's a Western play on Sakata's work. This is a Three Rivers pattern, and so there's a trough, and if we form another trough, that's three in a row. Then we look for a breakout higher. Volume profile wise, there's a support zone down at 112 that still exists. Below that, it's at 93 cents is the next one. But just look for a break here of the lagging span to close above the candles. And that is really going to be the trigger to look at re-entering long. And so that would occur when price moves back up to 132, which from the present trading area that it's at, that would put price, would need to be, Cardano needs to gain 10%, which seems like a lot in any other instrument, but it's not that much of a gain it needs to make for cryptocurrency. But look at what we have going on here. This is the one danger thing that I see going on here. The RSI is above 40, right? The RSI is sitting at 53.84. The percent B is neutral. That's good. But the composite index is doing this. If you look, the composite index, the red line, it has crossed below currently the yellow and the green average. So the green is its fast average, the yellowish orange is the slow average. Previously we looked at this triangle breakout and how that would generate some big moves. But this right here is not a good sign. But there's a very standard, this is like a textbook Elliott wave, impulse wave south. This could turn into a support zone. In fact, on the composite index where price is at, we have seen some support here historically. So just be on the lookout for that. But the only thing that makes me think we could travel further south is that there is a bearish cross below both of the moving averages here. And that is typically not a good sign, especially if the RSI, from a bearish standpoint, this is actually one of the ideal kind of setups you want to look for going short. The thing that will make it look really bearish over the long run is if the percent B here, if this guy moves from where it's at, if it crosses below 0.2 and the RSI is greater than 40, that's a bearish signal. That is a bearish sell signal. And if that were to occur, we could see one of these famous crypto flash crashes, and we could see very easily Cardano retrace down to that 30 to 40 cent range, which personally I would be thrilled about. If anybody is a long-term bull on Cardano, you are probably praying for a huge crash, because we just want to accumulate more at cheaper prices, even though we believe it's going up and we want it to go up. In the meantime, we want to keep buying in cheap. So I would be thrilled with any big drop down lower. And that actually does it for me on Cardano for today. Let's keep an eye on this throughout the rest of the week. From all of us here at Exchange Rates UK TV, thank you for watching. Please don't forget to like and subscribe, and look forward to speaking with you in our future videos.